The most powerful financial appointment on earth was just made. Trump nominated Kevin Warsh to replace Jerome Powell as Federal Reserve Chair. He takes over in May. But here's what nobody is telling you. The last Fed chair is under criminal investigation. The new one called for regime change at the Fed. And your mortgage, your stocks, and your savings are all caught in the crossfire. Kevin Warsh is not a random pick. He served as a Fed governor from 2006 to 2011, meaning he was inside the building during the 2008 financial crisis. Before that, he worked mergers and acquisitions at Morgan Stanley, then joined the Bush White House as a special assistant for economic policy. He's a Stanford and Harvard Law grad, a fellow at the Hoover Institution, and he's married to Jane Lauder, the granddaughter of Estee Lauder, and heir to a cosmetics fortune. This is not a populist outsider. This is Wall Street establishment with a direct line to the president. Warsh has been openly critical of the current Fed. Last summer, he called for regime change, saying the central bank had drifted too far into issues like climate change and social policy, instead of focusing on its core mandate of price stability and employment. He wants a leaner, more focused Fed. Wall Street's initial reaction, relief. Markets see Warsh as a conventional, credible pick. Not a MAGA loyalist, not a political weapon, a real monetary policy professional with actual Fed experience. But the context around this nomination is anything but conventional. Trump has attacked Jerome Powell relentlessly, calling him a fool, threatening to sue him over the Fed's headquarters renovation, and demanding faster rate cuts. Then it got worse. Powell revealed in January that the Department of Justice launched a criminal investigation into him, tied to his congressional testimony about the renovation budget. Powell called it a pretext to intimidate the Fed into cutting rates. That's an extraordinary statement from a sitting Fed chair, publicly accusing the administration of using criminal threats to influence monetary policy. Republican Senator Thom Tillis said he would block all Fed nominations until the DOJ investigation is resolved. Democrat Elizabeth Warren called the nomination the latest step in Trump's attempt to seize control of the Fed. This is not a normal transition. This is the most politically charged Fed appointment in modern history. So what does Warsh actually mean for your money? Here's the tension. Trump wants lower rates. Warsh is historically a hawk, meaning he generally favors higher rates to keep inflation in check. Those two positions directly contradict each other. The Fed currently holds rates between 3.5 and 3.75% after 3 cuts in late 2025. The next meetings are March, April, and June. Warsh likely takes over at the June meeting, his first as chair. If Warsh pushes for aggressive cuts to please Trump, markets rally short-term, but inflation risk returns and the dollar weakens. If he holds rates or cuts slowly, Trump attacks him publicly just like he attacked Powell, and the political drama continues. The most likely scenario, Warsh cuts modestly to maintain credibility with both the market and the White House, while privately resisting pressure to slash rates. That's the tightrope. And the bond market, the stock market, and your mortgage rate all depend on whether he can walk it. Deutsche Bank said other FOMC members will likely push back against any perceived political influence, meaning even if Warsh wants to cut, he may not have the votes. So what's the chaos capital take? The Fed chair controls the price of money. That affects every asset class: stocks, bonds, real estate, crypto, commodities. When the leadership changes, the rules of the game change with it. Warsh is a credible pick. Markets aren't panicking, but the political backdrop, the criminal investigation, the blocked confirmation, the independence questions, means volatility is coming. If you own stocks, rate policy is your single biggest macro variable for 2026. If you own a home or want to buy one, the 10-year Treasury yield matters more than the Fed rate, and that's driven by inflation expectations. If you hold crypto, rate cuts are bullish, rate holds are bearish. Watch the Senate confirmation, watch the June meeting, and watch whether Warsh bends to Trump or holds the line. That decision will move trillions. The last Fed chair navigated a pandemic. The next one has to navigate a president who wants to control the money printer. Good luck. The capital markets are chaos. Embrace it, and I'll see you in the next video.